Hi there, welcome to Kneppy Invest and welcome to Tuesday, 6th of August 2024. We have about 1 hour and just under 30 minutes left of trading. Time is currently 2:42 p.m. So that does include the closing auction. And overall, today has been a little bit better than yesterday. I'm not surprised we are up. You might be surprised because the American markets were down. I believe the NASDAQ was down about 3.5%. No, 2.96%. Dow Jones 2.6%. I believe the NASDAQ was down significantly more than that on open. I have a feeling it was down about 7%, or at least 6.5%. So we did see a bit of a bounce in the American markets. And then just before we opened, I noticed that the Asian futures was up. This was because of a few tweets, not tweets that I put out there, a few tweets I did see, that the Asian futures were up significantly, including Nikkei and also the Korean markets. And then I had a look at the American futures, and they were up significantly as well. That's via CNN. And then I had a look at some of the companies, American companies, and some of those companies' futures or post-market trading were up quite significantly. So there is potential, just potential at this point, that we might see a really good day on the American markets overnight. Just potential, because we just don't know what's going to happen intraday. Who knows? There could be some further bad economic news released, and that could drive the markets down. So I just don't know. No confidence at all in the markets because, well, a lot of volatility. And I actually will show you today VIX. I've never shown VIX in a video of mine before. So I thought today would be a good day to look at VIX. What we'll do before we have a look at VIX, because I'll have a look at that towards the end of the video, we're going to do the usual thing. Have a look at a few tweets. Have a look at the CNN pre-market stock trading website that I do look at for futures. Also have a look at the ASX Today, including the best and worst performing sectors, indices, and companies. Number one company should be a no-brainer if you do follow announcements. That company is Audinate. In fact, I was quite Twitter happy this morning with Audinate. I think I sent out something like 8 tweets. Could have bought Audinate on open this morning and made 50%. Yes, you could have bought Audinate on open this morning and made 50%, but the share price is down about 40% last time I looked. So isn't that weird? You could have made 50%, yet the share price is down 40%. So a very volatile day for Audinate, and I'll talk about why. Of course, that is the top stock of the day. Another company I own, because I do own Audinate, another company I own, share price of this particular company was up about 30%. So that company comes in at number 2. And the other 3 companies that made it into the top 5 stocks are Beamtree, Vista Group, and Recon. Either released financial results. Actually, all 3 released financial results, but Beamtree wasn't official financial results. And I might also discuss briefly another company with a ticker code ATX. I forget the name of it, but they do things. It's a healthcare company to do with pancreatic cancer, and the share price was up a fair bit this morning. Okay, so we have a look at those top 5 stocks of the day, and then we might have a look at some charts, including the VIX and also the Japan. Apparently yesterday was the single day biggest drop for the Nikkei since 1987. And I thought, if I don't forget, when was the last time we saw this bad of a day on the ASX? So go through time. I thought it was June 14, 2022, but no, yesterday was worse than that day. Okay, so let's get to today's video. And we'll start off with looking at pre-market. So I do go to this website sometimes, and this is just looking at the futures, Dow Jones, S&P 500, and NASDAQ. Sometimes you can see this on other sites. I do look at TradingView for individual companies' futures, but for most of the day, you won't see anything there. And in the first few hours after trading ends for the day, you will see some futures there. And then pre-market, you'll also see some futures there on TradingView, starting around about 6 or 7 p.m. local time. But Dow futures up 0.94%, S&P up 1.45%, and NASDAQ futures up 1.95%. So there is potential that it's going to be a pretty good day on the American markets. And they also have this fear indicator. Extreme fear is driving the US market, hence lots of volatility. So whenever I hear about or think about fear, I think volatility. When the market is in a raging bull market, fear is much lower. In fact, it's greed, and you see a lot less volatility. It's just the nature of the beast. Fear is much more powerful emotion than greed most of the time. Anyway, so that's the possible happenings on the American markets overnight. Twitter, so the Reserve Bank have decided, this was only 17 minutes ago, that they will leave the cash rates unchanged, which is not a surprise to anyone. And I doubt the market has reacted. I doubt the market has reacted at all to that because it was to expectations. And the way I can do that just in ComSec is just have a look at the 1 minute chart. Yeah, no reaction. No reaction at all. No reaction. It might have been small reaction. A very, very small reaction, but no significant reaction. So it's to expectations. Okay, so let's have a look at a few tweets that I did bookmark. August the 4th. Yeah, this is actually, yeah. Here we go. So I noticed a lot of people tweeting and talking about how Warren Buffett and Berkshire Hathaway sold a lot of Apple stock and their cash levels are building significantly. And to a lot of these people's opinion, that means the market is going to crash. Not necessarily so. So Berkshire Hathaway has dumped more shares this quarter than any other quarter in its history. They know what's coming. Funny enough, a lot of people responded saying, well, you only go back to 2017, and I'm pretty sure Berkshire Hathaway has a longer history than that. So I'd like to see if there was further proof that this is the biggest dump in shares in its entire history, because Berkshire Hathaway is a pretty old company. Was it 50, 60 years old? Maybe even longer than that. But they did, I would assume, this is just me assuming, and we know the saying, when you do make assumptions, you're more likely to make an ass out of you and me. I'm just assuming that the reason why they dumped a lot of shares is because they sold a fair bit of Apple shares, because maybe Apple is overvalued. Doesn't mean that they think the market is going to crash. That's what a lot of people were implying. Someone else here with a name upside down. I don't know how they do that. Brett Donnelly upside down. Just looked at, this is the VIX. I'm pretty sure this is the VIX. And the VIX got to extreme levels in the last 24 hours. And when I say extreme levels, it has only been higher twice. During the COVID-19 financial panic and during the GFC. Got to about 64, if I remember correctly. And this person is just saying, what's different between now and all these other times the VIX was high? Why is there so much fear in the system right now? Why? So worst pandemic in 100 years, global financial crisis, Chinese devaluation, VXS unwind, dot bomb, LTCM. Yet the VIX is higher, well, was higher. It's been unwinding since then. So this is probably this person saying, why is everyone so fearful? Why? Don't be fearful. Pup of Collins Street, in regards to the ASX yesterday, it was one of the worst days we have seen for a while. And the worst, definitely since the 2020 COVID-19 financial panic. So a lot of really big down days during that period. The worst one was down 9.7% on the 16th of March. I believe the low was around about the 23rd of March, something like that. So a lot of big down days then. I thought the 14th of June was our worst day, or was a worse day than yesterday, but no. Down 3.55% on that day. We'll have a look at the chart if I remember, because that June 14, 2022 was near the bottom. Wasn't the absolute bottom, but was near the bottom. So a pretty significant day on the ASX yesterday. Maybe not as significant in the Nikkei, which had their worst day since 1987. And here it is, bar chart. Circuit breaker was triggered in Japan after Nikkei 225 futures soared to the upper limit. There was also a tweet about Korea. Same thing happened to or with Korea. Anyway, so that's the tweets I just want to talk about. Now let's have a look at the ASX today. Hopefully your portfolio is up because, it's had a pretty good day. Tech is down. Mining is down. Small caps relatively flat. I would say a lot of the extra money maybe out there might be not piling, that's probably the wrong word, might be more interested in the larger companies instead of the small caps. So I would find it hard to believe that many small caps companies whose share price fell a lot yesterday have risen much today, if at all. So there is still opportunities out there to buy these small cap companies because fear is still out there. It's lingering, definitely out there. And in these sort of situations, the money tends to move towards the bigger, safer companies, defensive companies, that sort of thing. So I wouldn't be surprised that's what's happening today. Anyway, on the market, at one point this morning, it looked like it was going to really go for a significant rally. The XJO was up about 0.7 to 0.8%. I thought, well, here we go on a good rally. And then it collapsed and actually went negative for a short period of time just before midday. And a lot of volatility in the markets today. Not extreme volatility, but a fair bit of volatility, which again probably is understandable because you had a big down day yesterday and in another down day on the Friday. So when you see these really big down days, it increases the fear. And again, fear is much more powerful than greed, which is why in bear or bull markets, you see the market just grinding slowly higher. But in down markets, bear markets, it just collapses, just falls like a rock. People just get so much more fearful because they can't control their emotions. Have to sell, 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 sell. Okay, sectors. Let's have a look at the sectors. Pretty good day for 4 sectors in particular. Real estate, discretionary, industrials, financials. Utilities, okay. Staples, flat. And we'll say IT, materials, healthcare, all flat. Bad day for energy. I wonder if that's uranium, maybe oil, those sort of things. But yeah, energy down 2%. Even telecommunications down 0.59%. So I'm assuming Telstra's had a bad day. So I would assume Telstra is by far the biggest company in the telecommunication sector, and it's probably down. Banks, good day. Yeah, it's a gold, bad day, down 1.55%. So let's have a look at the ASX 20. I would assume 15 companies up, 5 down. Oh, very close. And I'm assuming Telstra's down. Maybe Woodside, Santos. I'm going to say Telstra, Woodside, Santos. What's another company in? I'm going to say those 3. Let's have a look. Woodside, Telstra, QBE, Rio Tinto. So Santos is not there. But yeah, Woodside. What's happened to Woodside? I'm going to have a look at the chart for Woodside, down 5.2%. So those who were trading Woodside thinking it could not go much lower, it could. Best performing companies today, Goodman Group. Nice little bounce there. CBA's had an okay day after down 5% yesterday. There's Santos. So something happened to Woodside. What happened to Woodside? What is happening to Woodside? Oh, they made an acquisition. They announced an acquisition yesterday afternoon. I completely missed that one. Woodside to acquire OCI's clean ammonia project. And the market's just gone, no, we don't like that, Woodside. Why are you doing this, Woodside? Don't make these sort of acquisitions, Woodside. And can I blame them? Well, I don't know. I haven't had a look at it. World's first ammonia plant paired with autothermal reforming with 95% capture. So is this sort of Woodside sort of hinting they are moving towards becoming a green company? Free cash flow accretive from 2026 and earnings per share accretive from 2027. This could be the market just saying, no, Woodside, no, don't do this, Woodside. And the chart still looks horrible. I still don't understand why people were piling into this, thinking it's a good trade. I just don't understand. There was no trade here. There was a nice little support level at $27. That's broken. There's little doubt that's broken. Down to 25. Is there value in this company? Well, the more it falls, funny enough, the more I might get interested. But the share price was significantly lower between 2020 and 2022. So who knows? And if you look through history, weekly chart, it's been much lower. Ooh, look at 2004. Oh, you know what? This includes dividends. If you get rid of the dividends, some people might say, oh, you always have to include dividends. But no, I like to look at the non-dividend. Anyway, so the share price was low. The last time the share price was this low was actually back in 2022 on a really good run, beautiful run developing Woodside back then. But is there value in Woodside right now? I don't know. So I'll leave that to you to decide. But Woodside's had a pretty bad day. That was a bit unexpected, to be honest with you. Okay, so let's have a look at the best and worst performing companies on the ASX today. And I do know which is going to be one of the worst performing. Also know which company will be one of the best performing. In fact, 2 best performing companies are in my top 3 stocks of the day. So let's have a look at the top gainers. Merchant House is not one of those. Yes, ATX, Amplia Therapeutics, share price up 33%. Not the sort of announcement I would be attracted to. So this is pancreatic cancer. and they just mentioned, 56% now. So a few weeks ago, on the 25th of July, sustained reduction in tumor size seen in pancreatic trial. Today, it was only additional patient response in pancreatic cancer trial. It's like one additional patient saw something or had good vibes or whatever. An additional patient in company's accent trial in pancreatic cancer has recorded a confirmed response. Combined with the 3 from the 25th of July, this total of 4 responders means only 2 more confirmed responses are required in this first of 2 patient cohorts. So it does seem like Amplia Therapeutics are in the early stages of this particular trial, phase 2A trial. So a long way to go for Amplia. However, the one thing you might look at is the chart and be excited about the chart. But these sort of storage stocks, I'm trying to stay away from these companies. But just because I'm trying to stay away doesn't mean you don't have to. So let's have a look at the daily chart. Really good day on the 25th, up by 61%, and then it fell 12%, went down to 8.5 cents. Now it's 14 cents. So it looks pretty good. Not as much volume today as probably I would like. And to be honest with you, this type of announcement, it's okay, but is it 55% higher worthy? Not for me. Anyway, so that's a company that could have made into my top 5, but not quite. Coming in at number 3, we have Highcom, up 25%. This company is in my top 5 stocks of the day. Possible value, just possible. Elsewhere, you have an ETF. BetaShares Crypto Innovators ETF. Bisan's had a nice bounce. Bisan has been amazingly volatile the last 3 trading days. They released a really good announcement last Friday. Share price rallied 7.8%, fell 12% yesterday, up 15% today. You'd be kicking yourself if you sold yesterday at 36.5 cents. It's up to 42 cents. Yesterday, I'm not sure why anyone was selling. The only time to sell yesterday was near open, because if you're selling near close, you are sort of betting that the market is going to continue falling. And even today, I just didn't understand why anyone would be selling on open this morning, because there was a chance that we're going to see a bounce, and there's a good chance maybe this bounce could last a few days. So I'd probably wait. If I really wanted to sell, I'd probably wait for the bounce. And we are seeing that in some companies' share price, including Visan. Have a look at the chart for Visan. You just see it in the chart. So much volatility, yeah. 3 days, just down, up, down, up. Let's have a look at the 1 hour chart. It doesn't seem extreme. Oh, that's a 1 hour chart. So I was, no, 5 minute chart. And funny enough, it looks like there was a fair bit of selling on Friday, the 2nd of August. Not sure. I didn't really see that. So initially when they released their update, someone didn't like it, and they sold on open, and they sold down to 35.5 cents. They look like a fool right now. And a little bit of selling on open yesterday as well. And a little bit of selling on open this morning. No, that's yesterday. Sorry. No, wait there. That is on close yesterday. Bit of selling on close yesterday, which did force the share price down to 37 cents. Again, on close yesterday. Don't sell on close yesterday. That was my rule, my little rule I had for myself. Don't sell on close yesterday. Wait for today, expecting a bit of a bounce. Anyway, that's Visan. And Beamtree, I'm very happy Beamtree is in this list. Number 3, my top 5 stocks today, up 14.3%. Have a look at this company. I have never had a look at Beamtree before. This is the first time I had a very quick look. Something to do with AI and health. That's all I know. But the numbers look interesting or intriguing at the very least. So let's have a look by market cap. What companies do we see here? And a lot of these companies are just bouncing because of a bad day yesterday. Clarity, bad day yesterday, bounce. Voltanics, I'm pretty sure bad day yesterday, bounce. Southern Cross Electrical Engineering, bad day yesterday, bounce. Some of these are uranium companies, bouncing. Tourism Holdings, probably bouncing as well. Quite a few, lithium, uranium, all bouncing. Demerics, bouncing. Visan, again, bouncing. Findi, bouncing. Appen, bouncing. Calix, bouncing. Everything's, not everything. A lot of these companies are just in this list because they are bouncing, not because they have released anything. And there's the Global X Semiconductor, up 11%. That's probably a good sign about what's going to happen tonight on the American markets, particularly with those semiconductor companies. I would not be surprised to see NVIDIA bounce upwards of 10% tonight. It might seem a little bit dramatic, but I wouldn't be surprised to see that happen. Okay, let's have a look at the worst performing companies today. And no shock. I thought it was going to come in number 1. But we have a company called State Gas coming in number 1, fairly low turnover. Let's just have a look. See if State Gas has released anything today. Let's have a look-see. Yes, they have. Successful. Oh, it's a capital raising. Don't care about capital raising. So let's move on to the real top loser of the day, and that is Audinate, down 36%. I have a lot to talk about in regards to Audinate in today's video, so I'll leave that to when I discuss the top stock of the day, which is Audinate, down 36%. At one point this morning, it was down over 50% on open. You could have bought this company at $6.50 and then sold it within 10 minutes at $10. Yes, the share price of this company went from $6.50 to $10 in 10 minutes. I would assume there's quite a few people who sold on open who absolutely kicked themselves. Well, at the same time, there was probably people who bought on open and who took profits, 50% profits in 10 minutes. That's a great trading day. Anything else here of interest? No. Oh, DeLorean. I stopped following DeLorean. They released a really interesting announcement a few weeks ago, and then they released, what was it? They released something, and I was like, was it Appendix for sale? It was Appendix for sale. I went, nah. And yeah, the share price was 9 cents, now it's 5.7 cents. Okay, let's have a look by market cap. Pro Medicus, another bad day, down day for that company. What's happening there? Continued. I don't remember hearing or seeing anything negative from Pro Medicus. Oops, nothing there. It's just a bit of fear lingering for Pro Medicus. It could be they are very overvalued, and in fact, yeah, dropped on open. Yeah, it could be. It reminds me of this. Look at the chart now. It reminds me of February. Share price fell a fair bit and then moved into the support zone and then started riding higher. I had been thinking about taking profit, not selling completely out of this position, but just maybe halving my position because I'm significantly in profit with this company and it is overvalued, significantly overvalued. And I just liked, who was it? Yeah, I listened to a few podcasts this morning. There was one, they were comparing Pro Medicus to NVIDIA. Another one, I think it was actually Motley Fool. They looked at NVIDIA, and was it Andrew Page was really surprised that the backward-looking P ratio for NVIDIA was 68. Forward-looking P ratio for NVIDIA is like 30, 35. And that's based off the forward projections of their earnings. And yeah, NVIDIA is growing strongly, and yet the P ratio of NVIDIA is half of what it is for Pro Medicus. And I do think the reason behind that is the lack of these type of companies on the ASX. So a lot of fund managers have to go into these sort of companies to get the really high quality companies. It's one advantage America has over us. They have a plethora of high quality companies. We don't have that. So you do see this overvaluation of companies like Pro Medicus. And it is, what's the word? It is, I don't know what the word is here. It is, you struggle. When you're holding companies like this and you see the valuation, you do struggle because you just don't want to own a company that has a P ratio of 200. Now, I'm pretty sure that's backward-looking PE. Let's have a look what the PE is. 196.35. That's backward, trailing 12 months. So they're going to grow, but even if they significantly grow, the PE ratio is still going to be really, really high. So that's what I'm grappling with right now when it comes to Pro Medicus. Great company, high-quality company, valuation. Valuation matters. And we saw that with Microsoft. For 15 years, Microsoft share price did nothing, did not grow. Company grew, but for 15 years, share price did not grow because at the start of that 15-year period, the valuation of the company or the P ratio was really high. And then that could happen to Pro Medicus. Share price of Pro Medicus from here could go sideways. For 15 years, company could grow significantly and still have a P ratio of maybe 20 in 15 years because it's so high right now. Okay, so Pro Medicus down, not surprised with Audinate. Some of these other companies are trading on fairly low turnover. Atlantic Lithium, A11. Let's have a look at Atlantic Lithium. So many lithium companies on the ASX right now. There's way too many. Yeah, I think it was like a few years ago, every second company listing on the ASX was a lithium explorer. AVG, Jennings, Globe International. I think some of these companies are just trading on noise. I think it's just noise. Not Globe International have not released anything. And Recon, we have Recon. RKN down 7.3%. That company did make it in my top 5. Coming in at number 5. So the only company missing is Vista Group. And we'll have a look at that company later in the video. Okay, so let's get to the top 5 stocks of the day, starting off with Reckon. Reckon, this is sort of like an accounting software company, I think. I think it is. So they released their half-year results today. I did have a look, and I went, nah, not for me. Well, this company has been not for me for a long, long time. Let's have a look at their financial history, and I would classify Reckon as a low-quality, non-growing company. I don't see why anyone would even think about buying this company until they show they can grow. So if you look at the growth in revenue over the last 10 years, minus 6% per year. Earnings per share over the last 10 years, minus 9.8% per year. Dividend per share growth over the last 10 years, negative 11.8%. So straight away, everything's negative. No interest. P ratio 11.4. That's okay. Company is going backwards. So that P ratio could be actually quite high. Return on equity is actually really high, 63.8, but the return on invested capital is 10. So there's a big difference between return on equity and return on invested capital. Could be because they have a lot of cash, that sort of thing, or maybe a lot of debt, something like that. Anyway, and the main thing here, there's no growth. No growth. Look at the income statement over the last 10 years. Let's have a look at revenue. First thing I always look at is revenue. And the main thing when you look at revenue, it's decreasing, going down through time. This is exactly the opposite you want to see. So that's Reckon's revenue history. So as soon as I see this, no interest in the company. What I would like to see is a return to growth. It doesn't have to happen really quickly, just revenue starting to grow. Now, you could argue, if you look at the last 3 years, revenue is starting to grow. Okay, starting. So let's have a look at their numbers. This is just a half year, not the full year. And the other thing I should mention, even though we are in August, and I expected a few more financial results being released, nothing yesterday, hardly anything today. Very scared. So there is a possibility the companies are just holding back. And maybe they're holding back because the results aren't that good and they're just procrastinators. Just putting that out there. Okay, so Reckon. The other thing I hate is companies do this. Every single company does this. They have like the 1 year in the first column, another in the second column. But sometimes it's a previous year in the first column and the current year in the second column. But for some companies, the current year is in the first column, the previous year is in the second column. I'm not sure which one I like, but every company does it different. Sometimes it drives me nuts because you look at one results and then the next company you go on to has the completely different setup. Anyway, so revenue up 1%. Yes, 1%. There is a little bit of growth, 28.4 million. EBITDA up 6% to 11.7 million. So there is a bit of EBITDA margin expansion there. However, net profit's down 18%. So the profit margins have decreased a little bit. Net profit attributable to members down 17% to 3.5 million. Okay, so let's just go quickly through the statements. Why not? I haven't looked at this in the past. Is there anything? So earnings per share 3.1. So share price of this company is 51. So if you extrapolate that for a whole year, yeah, P ratio of this company might be 8 or 9, but it's not growing. So yeah, doesn't really matter. Do they have a dividend? They probably have a dividend, small token dividend. Cash on hand is almost irrelevant. It's like less than $1 million. Trade and other receivables. Inventory is irrelevant for this type of company. The only big item in assets is intangible assets, or what I call not real assets. They're make-believe assets to, it's like, yeah, it's goodwill, something like that. It's not real. And that's the vast majority of their assets. In fact, I would say it's about 75% of their assets are intangible. If you look at liabilities, what's their biggest liability? It is contract liabilities. You also have trade and other payables and deferred tax liabilities. So no significant liabilities. And their equity, 22.9 million. So return on equity, return on equity, it can be quite high because they just have no liabilities. They have nothing here. So intangible assets. Take away the intangible assets, right? And the company would have negative equity. So sometimes return on equity is not the best measure because it takes into account intangible assets. And for this company, intangible assets are the most significant part of the assets. And what worth are the intangible assets? So I do have a question about that. I am not an accountant, But yeah, I would say that return on equity, which looked pretty high, is probably misleading because of those intangible assets. I prefer to filter that out. Look at real assets. And cash flow, something else I look at. Cash flow is a good cash flow here. So cash flow from operations, 11.3 million. Payment for capitalized development costs. So they're developing stuff and they're spending about $7 million a year on that, or half year on that, according to this. So they had net cash flow of about $4 million, and they did have debt and they repaid that. That's probably why the cash on hand is lower than you might expect, because they repaid borrowings. I didn't see much loans or borrowings here. So it looked like they completely paid it off. So in that case, they probably will be able to build up their cash position right now. But they really need to really put that R&D development into practice, because this is not growing at this point. Anyway, let's have a look at the chart for Recon. In fact, what I might do is also open up the presentation just to see if they have any interesting information in that. And then we'll have a look at the chart first. An uninspiring chart. Let's have a look at the weekly chart. Ooh, share price decreased a lot, 54% in November. I wonder if that was a capital return. Let's have a look. Let's adjust for dividends. Yeah, I'd say that would have been a return on capital. Back then, what was that? The 7th of November 2022. You could easily see, just go back 1 year. Actually, just look at dividends. Yeah, there was a 57% return, ex-dividend date 8th of November. There you go, franked 60%. That's why. They must have sold something. Yeah, it looks like they sold something and there was a return on capital to shareholders. So obviously they couldn't use that money anything else. No, nothing else. So if you actually adjust now for dividends, in this case, yeah, share price has done nothing over the past 20 years or so. It was looking good between 2007 and 2013, but yeah, not anymore. And the presentation is still opening up in CommSec, because CommSec is, I do like the platform, but not when it tries to open up announcements like this. Strong earnings profile. I don't know about that. Net cash of 0.9. Don't know, should net debt of 2.8 million. Oh, okay. So they were net debt 2.8 million. Now the net cash. Actually, that is a positive. Annual dividend 2.5 cents. So dividend yield of like 5%. 6 of the world's top legal firms use our solution. Market cap is 66 million. And major shareholders: Micro Equities Asset Management, MA Financial Group. And here's what they do: small business accounting and payroll solutions for SMEs, and practice management workflow for law firms, and then talking about cloud revenue. It's growing. Talking about how some of their customers like it, or something like that. Client testimonials. Don't really care about that. Anyway, I think that's all I really want to talk about when it comes to Recon. Not a company for me, but does come in at number 5 on the top 5 stocks of the day. Coming in number 4 is Vista Group. They also released some results this morning, half-year results. So companies are releasing the half-year results. This is a software company for cinemas, which I suppose there is a debate how much growth there's left in cinemas. I haven't been to the cinema for about 5 years. I have no intentions of going to the cinema. I don't care about the cinemas. I don't care that it's a big screen, nice sound. I think it's too expensive, and I just like watching movies with other people, because other people tend to be pains in the butts. I hate people or listening to people eat popcorn. It really drives me nuts. So if I do go to the cinema, it's usually on a morning session during the week when no one else is there. Anyway, yes, as you can tell, I don't like people. Individually, I like people, but I don't like people as a group. Yeah. Okay, so this is going to take 5 years to open up, because CommSec, again, it's just, and again, this is so ridiculous. I'll just show how ridiculous it is. I'm going to open up this in Market Index, and it's going to be open up well before. Yep, it's instant. And it's, oh, there it is. I'll go have a look at this one. I do prefer that it opens up a separate file in CommSec. It doesn't do that in Market Index. I think it could do it. So let's have a look at the financial overview. I won't go into depth in this company. So good growth. There's well, maybe not good growth. So EBITDA 7.2 million, annual recurring revenue 129.4 million, up 9%. Total revenue of 69.6 million, recurring revenue of 63.4 million, operating cash flow of $3 million, or 6.1 million after adjusting for movements in working capital, which is interesting. They have included that. Outlook, they are actually forecasting nice growth. Or is this a revenue downgrade? So seems like this is a bit of a revenue downgrade. On track to be free cash flow positive in fourth quarter 2024. EBITDA margins stronger than expected, and EBITDA margin upgraded. So revenue downgrade, but EBITDA margin upgrade. And on target to achieve December 2025 and recurring revenue of $165 million a year. I just don't know what the total addressable market is unless they develop sort of new, like with the current customers, they develop new things they can do. Okay, so let's have a look. Let's go have a quick look at cash flows. So they mentioned they were operating cash flow positive 3 million. Purchase of internally generated software and other tangibles. That seems like it's an ongoing cost. So $10.8 million last year, 9.2 million. So I would say they are free cash flow negative by at least $6 million. So free cash or operating cash flow positive, but free cash flow negative by at least $6 million. That probably doesn't take into account leases, and leases are about $3 million a year. And I do like to take that into account. So they are free cash flow negative by about $10 million for this half year. And that means the cash on hand actually dropped from nearly $30 million to $20 million. So there is a possibility this company might have to do capital raising sooner rather than later if they don't turn that around. Okay, so that's Vista Group. Let's have a look at the chart. In fact, the chart looks better than Recon Group. Definitely the sentiment in this company has shifted to more positive. That's the weekly chart. Now, back in 2019, the sentiment in this company was quite high. Share price got to $5.60, fell all the way down to $1 in April 2020, and has started to recover the last few months. Actually, we'll say 6 months. Yeah, broke out in January at about $1.40. I was trading this, but it was too illiquid for me. But the share price has ripped higher. Share price rose 17.6% on the 27th of May. What happened on the 27th of May? Was that a takeover? 27th of May. Oh no. A change in substantial holding, becoming a substantial holder. Someone bought some shares. Okay. So the chart actually doesn't look that bad. The valuation of this company is quite high. There's a little bit of, I suppose, potential priced into the share price and valuation. So market cap is 520 million. And probably on that alone, I don't see any value in this company right now. If this market cap of this company was less than $100 million, I'd definitely be way more interested. So there is a bit of blue sky already priced into Vista Group. So it's coming in number 4, Vista Group. Coming in number 3, we have a company I have not looked at before. So the company released their financial year 24 unaudited results. And share price has rallied 17.1%. So I thought I'd have a look at it. I don't know much about this company. They something to do with AI and health. That's all I know. So let's have a look at the About section first. And does the About section clarify anything? Leading provider of AI decision support and data insight solutions. Beamtree supports healthcare providers globally. They believe in creating, I don't care what you believe in, what do you do? Their solutions and services offer customers an unrivaled range of analytics across 4 key product segments. This is the most important thing. Diagnostic technology, enabling the effective delivery of diagnostic services as they underpin the future of health and personalized medicine. Clinical support, clinical decision support, coding assistance and data quality, digitizing and automating workflows with data classification, coding, and technical expertise, and analytics and knowledge networks, combining data and analytics solutions with peer-to-peer alliances that accelerate innovation, acknowledge diffusion. Still don't know exactly what they do. Maybe I'm too stupid, but they did release some numbers, and the numbers are telling me this company is close, if not already, hitting their inflection point. which is maybe the reason why the market is a little bit excited today. So annual recurring revenue growing, up 12%. Revenue up to 27.6 million, up 21%. Total operating expenses, 27.2 million, which means this company was operating profitable. Yeah, operating profitable, not profitable, operating profitable. They do mention here their definition of operating profit excludes foreign exchange gains or losses, share-based payments, which for American companies can be quite high, and any ongoing operating expenses, including restructuring, transaction costs, and fair value adjustments, which are treated as non-operating expenses. So this company is very close to hitting that inflection point. Cash at the end of June, $5 million. I'm just going to open up the presentation because I did find something intriguing in here because they did break down the half-year numbers. So strong cash flow and good financial year 25 outlook. Again, outlooks are very important, and we'll talk about this when we look at Audinate. So what I did find intriguing about this company, so nice growth. Yes, that's good. Really good growth over the last 5 years. It's gone from 4.1 million revenue to 27.6. Beautiful. But if we look at the half-year number, here it is. Strong profitability improvement. So annual operating profit, it's gone from negative 4 million to positive just. But they're broken down into half years. Negative 2.6 million in the second half financial year 22. Negative 0.5 million in the second half financial year 23. $1 million in the second half of financial year 24. So that means if we do sort of extrapolate that for the whole year, this company could be profitable, definitely operating profitable, but even profitable in financial year 25. So I can definitely see why the market is getting a little bit excited about this company. Now, what's the market cap for Beamtree? 69.4 million. Yeah, it's a little bit more, definitely more interesting than Vista Group, but not as nowhere near as much revenue. So not as mature, which is not necessarily a bad thing, or not necessarily a good thing. Anyway, so they break down their financial year 24 highlights into their four different divisions, like the diagnostic Ripple Down. There must be their software, I assume, Ripple Down. Anyway, you go through that yourself if you really want to. Long-term horizon, I like things like this. So they do have a goal for 2026. $60 million in, I think this is recurring revenue, or is it just revenue? I forget. But the main thing here is they received $25.5 million in financial year 24. In 2 years, they want to double that, or more than double that, which is pretty impressive if they can achieve it. Because in the last 2 years, they really haven't grown. Why do they have two financial year 23s there? They have financial year 23 and financial year 2. I assume that means financial year 22, then financial year 23. So the last 2 years, they haven't really grown as much as they expect to grow in the next 2 years. Now, if they can grow their revenue to $60 million, that would be impressive. And I'm assuming the margins would expand as well. I'm just assuming it because there's a potential that the management could have much more ambition and they could really expand their spending, which means they could be actually loss-making in 2026. They could go down that route, which I believe would be the wrong way to go. But you never know with management, particularly if they are very ambitious. Do they have another financial year 25? Pretty sure they do. I remember seeing it. International expansion. Here we are, outlook. There we go. I'm pretty sure this is what I looked at. Management reaffirms long-term outlook of delivering annual recurring revenue of $60 million by 2026, continuing revenue growth of 20 plus per year, cost growth percentage targeted to be lower than revenue growth. Okay, that's probably the most important thing. So I was concerned that there is potential that they could increase their costs or their spending at a greater rate than revenue, which means the company would not be profitable. But if that is true, that the cost growth is going to be lower than revenue growth, the margin should be increasing. Margin increasing or revenue increasing, margins increasing or expanding, profitable company in 2 years' time. Definitely see why the market is getting interested by or with this company. So BMT, let's have a look at the chart for Beamtree. And share price was in a downtrend. In fact, share price was in a downtrend since 2021. When did this company list? When did it list? So it's listed in 2019. This is really the first time I've had a look at this company. And it's interesting because the share price was in a beautiful uptrend in 2020, 2021. Share price went from about 15 cents to a high of 70 cents. Now it's fallen from 70 cents to a current share price of 24 cents. But I think there are signs things are turning around. Now, the last time there was a bit of a run in the share price, there was a really good volume coming through. Then the share price went sideways, volume died off, and we have seen some good volume coming today. Better volume, but not as good as we saw back in May, April and May, when the share price got to its lows of about 16 cents or so. I would have preferred not to see the share price up to 25 cents back in May. If the share price didn't get that high, this could have been a breakout. So the breakout I am looking for, but definitely a company to put on your watch list just because they are close, if not already there, in hitting that important inflection point. That's Beamtree. First time I've had a look at Beamtree Holdings. Okay, coming in number 2, a company that has, the less said better. Oh, I don't know how to say that. Highcom Limited up 24%. I'm a shareholder of this company. And the share price got down to the point where it was just no point selling. Anyhow, in the last 2 days, they have announced 2 new ballistics product orders. Yes, 2. There was a long period where nothing came out from this company. And then the management got fired. And I really like how the board reacted. Management said, what's happening now is not acceptable. You're all fired. And yes, when was that? Here it is, back in February. Released their results on the 12th of February, and the CEO resigned on the 13th. I doubt he resigned. I'm pretty sure he got the boot. And you could be able to see that in the chart. But anyway, one of the biggest problems was the lack of these ballistics products orders, and they've announced 2 in 2 days. 8.9 million and 2.5 million. Now, the one they released yesterday didn't cause much of a up 7.4%, so it wasn't as much as you might have expected, and only 530,000 shares traded. Today, the announcement has caused way more of a ripple. I can understand yesterday there was a lot of negative sentiment in the market, and maybe it was just people thinking it was just a one-off, and then this one, even though it was significantly lower in terms of value, the market's gone, oh, wait there, 2 big announcements in 2 days. Volume 5.6 million, share price up 24.14%. So I think potentially what the board did back in February is paying dividends, not literally, right now. So not literally, they're not paying any dividends right now. Have they ever paid a dividend? Not yet, and that's good. All right, so let's have a look at the chart. So yeah, you probably noticed I have not even opened up the announcement. So it's not technically the announcement that's important. It's the perception of the company that's important. They're now starting to generate new orders, new contracts, and that's quite important for this company because of what happened with the last CEO. He didn't do his job. Maybe he was in his office all day playing Minecraft. Don't know. Anyway, and so we can see what happened with the share price. So this company was, I wouldn't say a market darling. So the share price reached a low back in February 2022, which was when Russia invaded Ukraine. So this company benefited from that. But the benefits only lasted so long before the old management team didn't do its job. So share price goes high, 76 cents. And then when they released their results in February, share price on that particular day fell 44%. But you notice when the share price did drop in February, it dropped no more. It dropped 3 days in a row, and that was it. Share price has been going sideways ever since. So that's a sign the selling had stopped. So during that period, there was no way I was going to sell my shares in this company because I think the low had been reached. So I'd be selling near the low, if not at the low. So I decided just to hold my shares. Today, there has been a little bit of selling, which is understandable because we still have not had enough time for all the old shareholders to sell out. We need that time. And the share price, has fallen from the highs. 22 cents was the high today. Now it's 18 cents. But the volume coming through, really big volume. This could be the first sign. Now, when the share price originally broke out back in February 2022, the same thing happened. You can see on the 7th of March, share price on that day rose 10%, but share price closed at 22 cents, but rose to 30 cents. So a lot of selling. So same thing's happening now. And the reason there was a lot of selling that day, look at the past. And then it took a while for the share price to really get going. Took a while. Share price broke out maybe a few months later. But this could be the first sign of a breakout or a shift in sentiment and a shift in trend in the share price that we have seen. Possible. Just saying possible at this point, but it's definitely there. So it's Highcom. It used to be called XTech or something like that. Change the name. Coming in number one with the bullets is Audinate. What is it down now? Down 35.3%. Okay. Why is it down? They released their financial year 24 preliminary unaudited results and financial year 25 outlook. So there's two very important things here, the results and the outlook. I did see a tweet from one of the Ausbiz the Core people, forget which one, who said, oh, these results aren't that bad. And then someone replied to him, have you looked at the financial year 25 outlook? Anyway, so the results actually weren't that bad. Someone else did say maybe slightly below expectations. So revenue up 28.4%. EBITDA up from 11 million to roughly 20 million, so almost double. Unaudited gross profit 44.5 million, up 33.2%. And gross margins are 74.3%, up from 72.1% in financial year 23. So those numbers look pretty good. I don't know what the expectations were, but those numbers look pretty good for this type of company. We want to see that growth. And yeah. So I saw that and I went, as a shareholder, it looks pretty good. And then the next page, financial year 25 outlook. And this completely changed my opinion. This is one of the most negative outlooks I have seen for a while. So sometimes you might say when a company releases a positive outlook, well, of course they're going to release a positive outlook. They always do that. Well, here is the proof that doesn't always happen. This is really negative. So straight away, financial year 25 revenue faces a combination of headwinds. You want to see tailwinds there, not headwinds, including, I won't go through everything here, but it's negative. It all leads to this paragraph here. Audinate expects to generate US dollars gross profit marginally lower than financial year 24. It's like, whoa, market's not going like this. And there will likely be a decline in revenue in financial year 25. Market's not going to like that. Before a return to anticipated growth and more predictable order patterns in financial year 26. Then they talk about a range of initiatives. Now, there is a possibility the company is being conservative with their forecast, and there is a possibility that the company is going to release profit upgrades during the rest of the year because things aren't as bad as they assume. Now, I would love it if the company did that. The management of any company does that. Be conservative when you first do any sort of outlook. Be ultra conservative and then release profit upgrades when things aren't going as bad as you might assume in the worst case scenario. I like those sort of outlooks instead of the bright, rosy outlooks that are not taking into account any sort of negative thing that might happen against your companies. And that's why you do see a lot of downgrades because companies just think, well, what's the worst could happen? Well, actually, they probably don't even think that. They just think, this is what's going to happen, with ignoring all the bad things that could happen, and hence they have to do profit downgrades. Anyway, straight away, I knew the market was not going to like this, simply because no growth in financial year 25, even though financial year 26 might be great. Anyway, so this announcement was released at 8:19 a.m. and I went, as a shareholder, I'm just going to follow the company's share price. My first tweet was saying, market's not going to like this. There is a possibility share price could fall below $10 in the next month or so. And then I looked at the indicator price and it was already at $10. I went, share price actually might open below $10. It didn't open just below $10. I thought maybe $9.50 or something like that. It opened at $6.55, down 50%. Yeah, yesterday the share price closed at $13.32. So that is almost, 2 times $6.55 is, what's that? $13.10. So by more than 50%, share price opened. So it opened at 6.55. The low of the day was within that first minute, 6.50. And within 10 minutes, the share price went to the high of the day of $10, which was 50% more than when it opened. Yes, 50%. Just do the maths. Half of 6.50, which is the low, is $3.25. So add that to 6.50. So 50% of 6.50 is $9.75. Someone could have bought at the low of the day and then sold 10 minutes later and made 50%. Yes, that's the volatility you might see when a company releases this sort of announcement. You can see it. I wish I was paying more attention. I don't usually trade on open. I usually wait a little bit and then just wait to see how the market reacts. So this reaction was really sudden. So I completely missed this. I wish it was a little bit more delayed. And you can see that just by looking at the 1 minute chart. It's just extraordinary, this. There it is. Share price opened at 6.55. The close, the low of the day was within the first few seconds. In fact, let's have a look at the, we can do this. Actually, I was going to say, we can do this in the course of sales. Go all the way to the bottom. All the way to the bottom. So it opened at 9.59 and 45 seconds at 6.55. So a lot of trades at that point. And then we're going to see when 6.50 was hit. It actually went to 7.10 pretty quickly. Not seeing 6.50. Where's 6.50? $6.50. I didn't see any 6.50s there. I did not see any 6.50s. Where is this 6.50 coming from? Seems like, just based off this, the low of the day was on open. Maybe I completely missed it, but let's have a look at what time at 10 o'clock, what time $10 was reached. Now, we're still very early in trading. You can see the share price just going higher and higher. Now we're getting to $9, very close to $9. Massive amount of trading. Oh, now to 9.50, 9.60. Might have missed 10. I might have gone straight past $10. I want to see. I wonder if I did go past $10. There's a chance I did, or maybe not. There it is. There's $10. Yes, at 10.07, share price hit $10. 34 shares traded at $10. I'd say someone just bought on market, and that's why the share price got to $10. So more than likely, not many people, maybe one person sold on or for $10 at 10.07. Yes, 7 minutes. The share price rallied 50% in 7 minutes. Anyway, and since then, share price has dropped. So at 861, and I would assume we're going to see a lot of volatility during the next few days. Although share price really not doing much for the last 3 or 4 hours, just going sideways at about $8.50. So I think the market has reached a bit of an equilibrium here. They believe the value of this company right now is $8.50. So that's Audinate. I do like the future of this, long-term future of this company. And I did actually mention in one of my tweets that I would buy shares in this company if they were below $10. I did not expect it to be today. Now, I have not added to my position because I do believe there is a possibility I could buy shares below 861. And if I do see the share price get, say, below or near $7, yes, I would be willing to buy some more shares in this company. Okay, so let's have a look at a few charts. VIX. I've never looked at VIX or showed you VIX, I believe. In fact, I can't even... I once knew how they calculated VIX. It's something to do... It's actually... They use options. Forget how they use options. How to calculate VIX. How to calculate... How do they calculate VIX? Calculate 30-day variance by interpolating the two variances depending on the... Here it is. VIX is based on the option prices of the S&P 500 index is calculated by combining the weighted prices of the index's put and call options for the next 30 days. It's just a volatility measure. Volatility measure, increased volatility. Some people also believe it's a fear index. They use this to judge the fear in the market. So when it gets pretty high, there's a lot more fear. I wonder if actually you do see that. VIX and fear. VIX and fear. Let's see if there's anything about that. Here it is. A higher value on this fear gauge signals more expected volatility. So you might have heard me sometimes. There it is. Wall Street's fear gauge, the VIX, hits highest levels since the pandemic. Market plunge in 2020. So sometimes you might have heard me say that, fear is more, actually, I've said it this episode, fear is much more powerful than greed. And during bear markets, you're going to see a lot of volatility. And that's when fear is much more powerful than greed. So bear markets, a lot of volatility. Bull markets, you don't see much volatility. So you see those really big down days and those really big up days during bear markets. So whenever anyone says to you, or you hear anyone say, you have to stay fully investors, because if you don't, you're going to miss those really good up days during the bear market. Well, you also miss those really big down days as well. So it sort of cancels each other out. In fact, you're more likely to miss more down days than miss those up days. So I've heard people say that you have to stay fully invested, because otherwise you might miss all those good days. You might miss those good days, but you also miss, that's what they miss. That's why they exclude. You also miss those really big down days. So a lot more volatility in bear markets when there's more fear in the market. Anyway, so let's have a look at the fear index. Really pulled back strongly yesterday. So when it's high as 66, I thought it was 64, has pulled back to 38. And you can see 68, last time it was 68, was during the COVID-19 financial panic. Actually, let's have a look at the weekly chart. So you can just see these little spikes in VIX, and sometimes these spikes in VIX are very short-lived. You see 1 week spike in VIX back in February 2018. There's a 1 week spike in VIX in August 2015. There's some spikes in VIX in 2011. I think that's something to do with what was happening in Europe back then. A bit of a spike in VIX back in May 2010. And VIX was really high for a long period of time during the GFC, and of course during the COVID financial panic. So this could be one of these random. Does it go back further? Yeah. This could be just one of those random weeks we saw back in the 2010s when that's it. Just 1 week, 1 day of really high volatility, high fear, and that's all she wrote. Anyway, so that's VIX. Apparently you can trade this. I didn't know that. Apparently you can trade it. The other thing was, I just want to look at the XJO. When was the last time we had a down day like yesterday? So it was down 3.7%. Not only that, 3.7%. And I was thinking it was going to be June 2022, June 14. And here it is, June 14 down 3.55%. And then the low was about 5 days later, and then it bounced. We don't usually see these sort of days. Back in January 2022, nothing. So it's that 1 day in June 2022. And you can see, this is perfect. You can see during this bull market, there was very little big down days and very little big up days. So occasionally you see a down day of maybe 1.5%, and occasionally you see a good up day, but nothing extreme. And if you go back to the GFC, or the COVID financial panic, that's understandable. But if you go all the way back to the GFC, which is way back here, a lot of the really bad days during the GFC were towards the bottom, like October. There was a down day of 8.4%. There was a really big down day on the 22nd of January. The market on that day fell 7.1%, but then it was around just after that. But a lot of the really big down days ended or were towards the end of the GFC. And October 2008 was the really bad month because quite a few of the banks were going bankrupt at that point. Lehman Brothers, that sort of thing. And that was near the bottom. And then when the market rallied, you don't see any really big down days, but you don't see really big up days as well. So that's the XJO, and I do have the Nikkei somewhere here. This is Nikkei 225. I'm not sure how far back this goes, but someone did mention, no, you're going to have to look at the real Nikkei, which I do have somewhere here. Where is it? No, that is the real Nikkei. Look at the market. Have another Nikkei here. No, that is it. It goes back to 2016. I need to look at the real Nikkei. It goes back to 1987. Anyway, that's really all I have for this video because it's been going on for longer than 1 hour. I spent probably a little bit too much time on Recon because I've already forgotten what that company does. No, I haven't forgotten. I'm just making that up. Anyway, if you have any questions, any thoughts, leave those in the comment section of this video. I really wanted to get a few of your comments, but unfortunately, I just rambled on a little bit too much in regards to Recon, Vista Group, Beamtree, Highcom, and Audinate. If you have any questions, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day.